So you all excited about this? I looked at the schedule and went, oh, they put us at 4. That's so we can go have a stiff drink when we're done. Figured that's why they did it. So thank goodness Charmaine is here with me because she's on the...
Sorry, y'all. Seriously, this is really very
no, she's on the NACUBO Student Financial Services Advisory Board, so she's got a lot of information. So I'm Jerry Landwehr. I'm from the University of Northern Colorado. We're about 50 miles north of Denver and right next to the beautiful Rocky Mountains. And we have undergrad, grad, and doctoral programs, and we have about 13,000 students. So that gives you a little bit about me. And yours wouldn't work the last time. Okay. So what's a 1098-T? We all know this. Informational only form, provides qualified tuition expenses and now payments, and scholarship and grant information. It assists in determining if a student can qualify for educational tax credits and is now required, except under certain exceptions if a student wants to claim an educational tax benefit. So a 1098-T has become more important than ever before. So why do we hate it so much? We just do. It's awful. So confusion on who gets it and who doesn't need one. The Box 1 change. Is there anybody in here who currently uses Box 1? Could you come up and just do the presentation now? Dang. All right, well, you're going to be our expert. We're going to count on you. Issues with the IRS, we all know several years ago, everybody got the tax ID and Social Security number. We got our big tax bills from the IRS saying, hey, you failed to provide these, and thank God that little thing has gone away pretty much. Can we deliver it electronically, and how do we do that? And students and parents who think we're tax experts and the IRS who aren't. So much fun. So who needs one? We have to file it for every student enrolled who has a reportable transaction and any adjustments for a prior calendar year that's made during the current calendar year. Now next year will be a little different, except for the one gentleman who currently uses payments. None of us will have anything in Box 4 for next year because we won't have any adjustments for charges because we're now reporting payments, and we didn't report payments last year, so there won't be any adjustments for Box 4. So who doesn't need one? If a student's taking non-credit courses, non-resident aliens unless they request them, students whose qualified tuition-related expenses are covered entirely by scholarships. So if your Box 4 is greater than, used to be Box 2, now Box 1, you don't have to report those. Or for students who there's a separate account and they're not covered under a formal billing arrangement. So if you don't have a separate student account for these students, you don't have to do that. A lot of that is with employers or sometimes high schools that are paying for the students. So there's some future developments on that front. The IRS has some 2016 proposed rules exceptions. They would like to eliminate all exceptions except for students taking non-credit courses, students with aid that exceeds payment for QTRE or Box 1 greater than Box 5, non-resident aliens, and students whose charges are paid by third parties. So at UNC, we actually already report 1098-Ts for all of these students except for those with a third-party agreement. So when the whole issue with the Social Security numbers happened, we still ask all of our foreign students for a tax ID number, and so we're covered. If they don't provide us one, don't have us have one, we still give them a 1098-T, and we found this is really helpful for us because then we don't have students who come to us and want one printed or want to go back several years because we already have those generated for them. So for us, we decided that it was easiest for us to do that. I know NACUBO is recommending that the IRS, that the only one that they keep the exception for is the students taking non-credit courses and for the where QTRE, payment exceeds QTRE. The other ones, they're still trying to get the IRS to say that there's no exceptions for those. But we won't have final rules out to who knows because it's the IRS.
Well, and the situation in Congress and all of that is
boggling things up. There are lots of vacant positions at the IRS that haven't been, appointments that haven't been filled.
Well, who wouldn't want to work there?
I know. So, yeah, they're not in a rush.
So we have no clarification, unfortunately, on a lot of things. Until we do it wrong, then they'll tell us. So the box one change.
Oh, I forgot I'm not on a mic. I'm sorry. I don't know how to turn it. Hold on. Howard. Can you hear me now? No. Can you hear me? Really? I can. Okay. I can't hear myself. So a lot of the reasons why we haven't gotten any feedback, because NACUBO has been advocating significantly, a lot on our behalf, is because of vacancies with the IRS. So they don't have the right people in place. A lot of the folks that are there were not there originally when these exceptions were made, so nobody can really understand why at this point. So it's kind of at a stall in terms of the exceptions, but that's something that NACUBO is vigorously advocating on behalf of us.
So the box one change. So instead of being able to report charges, like most of us have done for years and years, we now have to report payments received for qualified tuition and related expenses. You'll also hear that called QTRE or QTRE, so any of those are the same thing. So beginning in 2018, so starting with everything that we've done so far this year, only box one can be reported. If you are currently reporting charges, you'll need to make sure that for the 2018 1098Ts, that box 3, the reporting change box is checked. And you'll only need to do that for that 1 year. So payments, any payment made during the calendar year from any source. So this means any cash, check, credit card, loan, scholarship, grant, any payment that's received, except for those that can only pay non-QTRE. So if you've got a scholarship that's for only housing, room and board, only for books, those scholarships will need to not be reported in box 1, but anything else will be reported in box 1. There are no other exceptions for that. Up to the total amount billed for QTRE. So there's going to be a cap. So say you have $10,000 in QTRE and you made $5,000 in payments. You're only going to be able to report $5,000 in that box. If you had $15,000 in payments, you're only going to be able to report $10,000 in that box because it's going to be capped up to the amount of QTRE. You won't have to worry about whether a scholarship or a grant, if it can pay for more than non-QTRE. If it can pay for both, you don't have to worry about splitting that up. You can just go ahead and dump that all into payments and know that it's going to cap with the amount of charges. I know a lot of people are thinking that you have to look to your ERP system and application of payment and know exactly what they wanted to pay for. Unfortunately, we won't have to do that because I'm not sure how that would even work. Reimbursements or refunds include amounts institution credits to a student as well as amounts dispersed to or on behalf of the student. So this is where I'm a little fuzzy. So Charmaine's gonna help us with this piece.
So box 1 is I'm sorry, I keep forgetting I don't. This mic does not seem like it's on. Is it really on? Can you hear me? Okay. It doesn't seem like it's on. But I'm a loud talker, so we'll see. So box 1, the calculation is simpler, if that's a word, than you thought. It's all payments, every single payment, every single payment. Repeat after me. All payments. So it's box 5 that you exclude, things like you only include scholarships or grants. So payments from any source, that's what I mean when I say all payments, because Jerry's right. Anything that's directed towards non-QTRE does not get included. So it's payments minus refunds up to QTRE. Payments from any source except for the restricted minus refunds up to QTRE. And the rationale for refunds is because the refunds piece is what was added by the IRS, because for some reason they want to make sure that they're not including in the amount paid money that we've given back to the student. So, I mean, that's in the regulation. So,
And I think isn't the only stipulation is if you use that overpayment, if you hold it and pay that credit onto a future term,
so
and that's included as payment. Is that correct?
yes, that is included as a payment, but that is one of the areas that we have not been able to get the IRS to nail down exactly, because that's like, say you student has a credit balance of $5,000, then you move it and you apply that forward to another term or a different balance. But the thing about that is if you're not going to refund it, it still all balances out, if that makes sense. Does that make sense? So if you apply that credit balance, then they get the benefit of that whole payment. So if they paid $10,000 and they have a $5,000 credit balance for fall, but then you apply that $5,000 credit balance, you know, for spring or for whatever, then they still get the benefit of the full $10,000 instead of it being deducted, if that makes sense, from